Rana Gupta joining us now, Managing Director, India Equities at Manulife Asset Management. Rana, good chatting with you again. This time, of course, we're looking for some kind of indicators going forward. We've got global nervousness on one hand, strong domestic cues on the other hand. What are you looking at when it comes to India right now?
Hi, good morning. Happy to be here. I think from a global investor perspective, given the global uncertainty due to trade war and other reasons, investors are looking for markets which has the following characteristics. Number one, a strong domestic demand and some sort of reform to further strengthen that demand for the longer term. Second, they're looking for government with some sort of stability, and there's a lot of political capital, which means that the government need not rush into some sort of fiscal populism. And number three, the market which has room to accommodate on the monetary policy side, i.e. inflation is well under control. Now, if you look at it, India kind of ticks all the three boxes in the current scenario. So therefore, I think from a global perspective or even regional perspective as an emerging market, India from a top-down perspective looks better positioned than others.
Sure. Rana, it looks better positioned, of course. There are still concerns on a couple of counts, so let me go through those with you. When it comes to the NBFC space, the kind of, squeeze that we're still seeing on account of news flow, and a lot of those mega groups, whether it's Indiabulls, ADAG, SL, for example, that we've been tracking, and the news flow around them. Do you see that still, still a huge issue with regards to liquidity, with regards to how FIs are perceiving, buying into financials at this stage, or do you see this as perhaps bottoming out and the beginning of a new phase?
So on that, the view would be that those may not become a systematic issue. Those are more company-specific issues. But there is no denying that NBFC and in that space that you mentioned, there is an issue. What we are looking out for the central bank to maintain the financial stability of the system, and we do believe that they have enough tools to do that. Because inflation is well under control, the central bank can inject liquidity into the market, and also we believe that there is more room to cut policy rates. So that's good news. Also, we note that the Indian banks, particularly the private sector banks, they are by now well capitalized. They have taken care of their bad loans, and the deposit franchise is good. And for them, deposit growth is not too bad. So we would expect that in time, may not be immediately, but in time, we give it 3, 6, 9 months, the banks would step up the credit growth to fill in for some of this NBFC void. So this issue will linger with us for some more time, but it is the issues are transient and not insurmountable.
Okay, fair enough. And you've also given me a sense of what you're liking in financials. Where else are you looking for opportunity then, Rana, when it comes to India? Would it be on the more domestic demand-focused names? We are still seeing a slowdown in consumption. So how would you maneuver that pocket of the market? Where would you be scouting for opportunities?
Yes, I think that's a very relevant point that the domestic demand at the moment is not strong; it's rather patchy. So how should one position? So in our view, one should look at more on a bottom-up basis, and what we're looking at is two characteristics where either the market itself is expanding at a rapid pace due to some reason. To give an example, we do believe that due to government's focus on public spending, the infrastructure, the construction market is expanding at a pretty rapid pace. So I think that is one area that one could look at, and we are definitely looking at. The second example is that where the companies are growing, although the market may not be growing, but the companies are growing by gaining market share. One prime example of same will be the private sector banks, which we just discussed. Another example could be the jewelry sector, where the listed companies or the organized companies are gaining market share over unorganized companies. The third example would be where the market is also expanding and the listed companies also increasing the market share. For example, think about chemical companies. Due to this, U.S.-China trade war, in our understanding, a lot of global chemical companies are looking to diversify their supply chain out of China and come to India. So here the market is expanding, and the Indian companies also globally expanding the market share. So sectors like construction, sectors like private sector banks, sectors like chemicals, there we see bottom of opportunity still present in spite of the near-term slowdown in domestic demand.
Basically, Rana, you're saying that stick to quality. Don't worry about a price correction which has happened in these names. They may look like bottom-up stories, but that's where value is. And in cases in point, for instance, be it NBFCs like a Bajaj Finance, or for that matter, jewelry companies like a Titan, valuations should not be a hindrance. Is that what you're trying to say on a longer-term basis?
I think on valuation, you have to take a slightly longer term call, and on valuation, as far as we are concerned, we are happy to pay up for better quality names because avoiding a value trap is also very essential. For example, there could be companies who appear to be value, but then there's no growth. Let us be clear that we are in India for growth and sustainable quality growth with good cash flows. And if those companies trade at a slightly demanding valuation, we would be rather tolerant of it, keeping the long-term view in focus.
Okay. So, let's define that long-term, Rana, because yes, I'm picking up from you that India's looking relatively better, that everyone's positive on good companies and cash flows. But I think there is, at least here when we speak to people, there is still a sense of indecision as to how soon we'll perhaps start to see that earnings growth kick in. What kind of time frame are you looking at?
So in the long term, it's clearly around 3 years perspective we look at. And as far as earning growth is concerned, our understanding is that if you look at FY19 earning and you take a step back and look back last 4-5 years earnings, in terms of reported Nifty earnings, the earnings growth area was pedestrian, something like 6-7%. But going forward, earning growth is going to pick up, primarily led by, again, the private sector banks. There's a large sector in the Nifty, and their earnings growth will come back very strongly. So I think consensus is expecting something like 20% plus growth. It may not get there, but nonetheless, even if the earning growth comes at 17-18%, that will be a strongish number, particularly in the kind of global context that we're talking about. So I think earning growth is going to pick up in FY20, FY21, and longer term, like we said, we discussed we are looking at a 3-year horizon, basically.
Any expectations from the budget this time, Rana? Are you looking at it as a near-term cue? Would you like to hear anything from the government going forward?
For the budget, of course, this is going to be one of the policy documents from this government. That what are the priorities? What do they want to do? What we would most likely to focus on is on the GST revenue side. That because of FY19 GST collection, whatever the base is right now, the targets that government has set previously now looks quite high. So I think one needs to set either a credible target or come up with measures by which that will give investors confidence that kind of revenue is indeed achievable by March 2020. So I think the revenue gathering will be the most important part as far as we are concerned.
Okay. Rana, just before we let you go, I just want to touch upon what's happening globally. I know our conversation has been more centered around India today, but you'll definitely have a perspective really on which way you see fund flows shifting, given what we're seeing with regards to the build-up around the trade tensions with China, and now also what we're seeing in Hong Kong.
Yes, definitely. I think that those are uncertainties. Global uncertainties are building. And these things obviously impact risk appetite, and this is where we go back to the beginning of this conversation, that the money that is still looking to invest, they are looking for markets with large hinterland, domestic demand, domestic reform, and governments with political stability, with the political capital, and looking for monetary policy where they still look for accommodation. And those are the top-down reasons why I think India looks relatively better positioned among the emerging markets.
Okay, Rana, great to have you on the show. Thanks much for taking the time out and speaking with us today.